Hey everyone, welcome back to your daily update for Sol and BTC. We've had a little pump. It looks like it's retracing. The question is, will it retrace to 50% and then flip around and go up again, or will it just retrace to a lower low? I guess is what everyone's asking. Could it be a liquidity grab, or could it actually be the first signs of reversal? These are all the questions. Hopefully, we can answer some of those today. If you are new to this, then just check out that educational playlist because a lot of what I talk about just may not make a lot of sense unless you do that. Or jump in the Discord. There's plenty of people in there that have been there for long enough now to understand most of this. And yeah, let's have a look. So liquidity, it is forming very quickly to the downside because of the pump, and everyone is chasing the pump. So both Sol and BTC have liquidity to take it all the way back to the 80s or down to the low 120s again. We may be seeing that one-day move playing out on Sol at the moment, which has a target of about 139. So there's trends and there's a bunch of resistance that they put in the way to kind of stop that from happening easily. So I think I said yesterday it'd be they were building resistance around 137. It doesn't even look like we made it to 137 yet in this move. So I guess we'll see whether or not it gets past that daily trend. It wouldn't be overly organic to push straight through that trend. I mean, they may position up against it for close today and then open on the other side of it tomorrow, but it's yeah, but if we were to push up to some of the levels that actually are required for us to fix today's closes, then it would be the strangest looking thing on the chart. You don't normally see candles just shoot up $20 straight through every single piece of resistance known to man. And unfortunately, for things like Sol to stop creating downside targets, they really have to get over 150. And yeah, at this stage, they're not making that very easy. Right, so BTC did bounce off some trends. Some of those trends have targets of about 93,570. 93,570 is also resistance, so we might be heading up to there finally. But really, it's all about timing. Because we've got such big major weekly closes today, the key thing is where is the price at the close. And for things like Sol to be bullish, they really need to be over 137 today. So doable if it extends through the trends, but not easy. So if it does happen, it's a pretty bullish sign really that they are actually going to try and continue the reversal for a little bit. Okay, looking at the 7-day liquidity, it's pretty even, so it's not really telling us too much. On Sol, you can sort of see they've wiped out most of the 7-day positions to the downside, and it looks like it would make more sense for it to keep pushing up just on the 7-day. And if we look at the 30-day, 30-day is a little bit more bearish, and you can sort of see there's that cluster on Sol up to that 139 area. Once you get past that, the question really is BTC because it is quite thin, but when BTC hits that 93,570 target, that's actually kind of where all of the liquidity actually sits, is above that. So the trend bounce wants to go to that level. The question then is, if it hits that level, does it trigger a short squeeze? And that could actually then break that resistance if it can get it in the first place. But as you can see, it's pretty thin. So, all right, let's have a look at the charts. So Sol BTC on the 1-day has bounced off the break level. To hit the break level, it had to push through the trend. So the fact that it's actually pulled back up above trend is reasonably bullish. It is still stuck under the downtrend. It hasn't really tested it. For this to get through that trend, it has to basically push all the way up to a point where it can open on the other side, which is around that 15000 sort of area. If it does that in the next couple hours, then hey, call me bullish. Other than that, it's just basically done a sweep to the downside, and it's kind of stuck in the middle of the wedge, and you'd have a sort of 1, 2 kind of about 2 days. It really has to break out of there in 2 days, and one of those top side or bottom side trends has to go. Now, if it can not revisit 14554 in the next 24 hours, then it's creating an origin level for reversal. If it engulfs this current candle that we're on now in the next 24 hours, assuming this closes blue, by the way, that everyone, but if it can engulf, including the wick, this candle, then it is creating a range. The range levels don't really line up with anything, just looking at them, so I don't know if that's really going to happen. It can also create a range off this candle, and that makes a little bit more sense just looking at it. So you might see this continue to push up before the end of the day. Okay, looking at the weekly. Well, it's good if it gets back up over the trend, which means quite an epic push. It really has to get back up over 15192 before the end of the day. That would be good. If it closes yellow like this, it's just such a nothing close because it doesn't shift any trends and it doesn't bring the support trend. So currently being underneath the support trend is basically acting as resistance. It doesn't move it to the bottom, so it just stays there as resistance. And then, of course, you get another week pushing up into it, but it's the kind of thing that creates fake moves that end up pulling back, because if it pushes up through that trend, hits any kind of resistance, like in this case it hit the prior broken trend, then normally by the end of the candle period it will already be pulling back down towards the trend, so kind of like fake pump type stuff. Now if it does close down today, then this shifts to the bottom, and by shifting to the bottom it could potentially bounce off it, and that actually might give a reversal. So yeah, it would almost be better if it did close down on the weekly. All right, let's have a look at these safety assets. All right, so the daily on the safety assets, if it was to close exactly like it is now, as you can see, a complete indecision type candle, then it is going to be on the wrong side of one range trend. It hasn't recovered the 1618 range level, so that's good. It didn't quite get to the level 1 down here, the 67.7%. Ideally, you just want to see this thing pull back. You want to see a close under that 67.91, and then it's genuinely under, quite a lot of that resistance. And at that point, and really only at that point, could you expect it to be able to have another push down and potentially hard close something and break something. But looking through these days here, so 1, 2, 3, 4, 5 days, looking at all 5 days, it's not hard closing resistance. It's not breaking it either. In fact, there it wasn't. So pretty much it's been 1, 2, 3, 4, 5, 6, 7. It's been like 7 days of just yes, no, yes, no, yes, no, yes, no. As far as, am I going to break out? Am I not? Will I hard close the resistance, make it support? Maybe, maybe not. So at the moment, it's just same sort of thing. If it actually opens a candle exactly here, it is on top of the interior support trend and under the range trend. So it's just a really annoying place for that candle to be. And yeah, if it goes down, then we need one more blue one. They could keep messing around and basically just go down and then go up again, keep it on the trend, not really have any kind of decision. And I am sort of just wondering if all of this is because we've got FOMC on the 10th, and maybe they just don't want to, do anything. Get everybody into the market. So pile in with longs, pile in with shorts, get everybody guessing about direction, and then obviously just take both sides of it come FOMC. Some kind of big pump and dump or dump and pump, whichever way they go first. Looking at it on the weekly, same thing, just a complete indecision candle. So it hasn't come back to the trend support. So there's should be a move between these two levels. It's just a case of It's touched one side, hasn't touched the other side yet. So if it was to open, it could travel up again, reject down, it could travel down again and bounce up. But it's just a complete indecision candle at this stage. And let's have a look at these totals. Okay, so we want to see a close over 2.75 today. If that happens, then at least it's kind of getting back up into some of these range levels. And you might then see the daily hold candle play out to that 2.88. Now, I say might because it will still be on the wrong side of the range trend. So it's one of those ones where it can try to push through in one day, but it'll probably retrace. If it can't get there that day, then it could try and push through again the next day, but probably retrace. And of course, if it hits those levels up there, it's going to run into origin levels and it's going to run into break levels, which means it's probably going to reject anyway. So um, it's just such a tough spot for this thing to break out of. It needs a daily close. Like if you are going to see a real decent daily breakout, you really need a daily close over that 2.86 or 2.88 sort of area, in which case it can try to move up, like a proper move up. At the moment, as you can see, it's really just an indecision candle, but at least it's getting close to having to make a decision. And when I say that, I mean it's going to make a decision of whether it moves into the next very small little range. But at least it could be out of this wedge that's been stuck in for quite a while through here. And now bearish side, well, if it closes down, if it pulls back to under 2.71 by the end of the day, then it's almost certainly just going to reject off the trends. It'll be under the interior support trend, and down it will go. So and this is kind of what I mean by it hasn't really tested the origin of the range yet. So this 2.65 trillion, it got really close and then it just kind of stopped and pumped up. And every time I see that kind of thing, I guess I'm a bit skeptical, but I just look at it and I think fake, because there is a reason why it bounced from there, which is well, there's a couple of reasons. One is because it was running out of time, so it was retracing back above the trend that it started from above. The other one is it tested the prior broken trend and it's found that to be support, which is the same as what had happened previously here and here. So, I mean, there are reasons why it didn't quite come down and touch that 2.65 level. But if you're going to really bust out of this thing and head up to the upside, it's pretty normal to touch these levels and then the volume comes in and then the price pumps. And that's, it hasn't really done that yet. So it's choosing option B, which is slow and boring and trying to get through the trend using time and sideways price action. So it is what it is. Let's have a look at the weekly. Yeah. So weekly can definitely open the next candle on the correct side of the downtrend. That's positive, but if it closes blue, then it is hard closing the entire upper range, so then that's bearish. So ideally, we just need that to just move up just a little bit, even just a little bit. It's all good to have 50 weekly yellow candles down below this line, as long as they're yellow candles. The moment you have a blue candle down below this break level, you've just hard closed that break level, and then 2.78 becomes resistance. So it really needs to hopefully have a yellow close and then get back up into that range, or of course any kind of pump, just a pump by the end of the day. That position that it was up, when we were up there at about that 2.89 during the week, was kind of the ultimate position if you actually wanted to get back up into that range, but I don't see it going back there in the next 2 hours. All right, let's have a look at Sol. Okay, so on the 1 day, this is what I meant when I sort of said, don't know, this looks a bit fake. So that is your origin support level there, which should give it, a nice pump. The level is 127.487. We got to 127.587. So we never actually touched it. Now, I don't know quite what to make of that, other than, the price went up, but it kind of went up not off that, which makes me wonder if it's just going to come straight back down again and take out all of these people that have started to long. So we're still stuck inside that whole candle. We've really got to get over that 133.398 for close, and if we do, then we can start to consider this target up here at 139.783. Now, if we don't, then all you're going to get is just the trend, being this downtrend coming down here, continually rejecting the price until either the origin level has to break the trend, and if it fails, then the break level has to break the trend, and if it fails, then the break level, the origin level will break, and then this entire range that the price is in now goes to the downside. And from a really simplistic view, that's kind of like ranging, 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 failure to recover 50% of the range, being the top here and the bottom here. And if it does that, often it's down to a lower low. Okay, so just because we're pumping now doesn't mean that it's going to keep going. It's really about where does it close. And when we get to some of these bigger weekly closes over here, you'll see how critically important that actually is right now. Okay, so let's have a look at the 11-day. So 11-day needs to get back up over the break level, and that break level is 137.082. So if we don't get back up over that break level, then we run the risk of losing that entire 11-day range. Same thing, this has got some support levels. They're not first touch, so there's no guarantee that they are going to support, but basically 120.6 and 118.3 would be the levels to the downside. We're on the correct side of the interior trend to try and break it, but it's not going to break it with this candle because this candle is a blue candle, and it really needs to be up over the 140s for this to even be remotely considered as a bullish close, because it needs to get back up above that trend. And you can see what happened in the last 11-day candle was it dived the trend and then it pushed back up again to close above the trend. And in this case, we've dived the trend, but we have not pushed back up above the trend yet. So with 1 hour and 56 minutes to go, it looks like it's trying to create a hold level. That hold level would be 139. The break level resistance would become 137. And yeah, there's a pretty good chance the daily move will fail if this thing closes down, just simply because it's not going to be able to, well, it could get to the daily levels. It would just have to be pushing through some of this resistance to do it. But yeah, it's looking like at this stage fake pump unless we close back up over these areas. Okay, and there's a weekly. So pretty much same thing on the weekly. It looks like it is not going to be back up over that 141.350 origin level, and therefore you might as well stay bearish. It also hasn't hit the origin support level to the downside, so effectively what happened was the trend moved, it then bounced off the trend, it's gone back up to test the origin, it's failed to break in either direction, and it is still indecision. Now, next week, it will be on the correct side of the downtrend to be able to at least escape that. This week, you sort of had to say it would be really inorganic if the price was to reverse when the candle opened on the trend. It's just kind of one of those things that doesn't really happen terribly often. If it is to become bearish, then all they're going to do is they're just going to keep pushing the price down, before the end of the day. And if they close decently down underneath this, in fact, they're dumping it right now from the looks of things. Oh yeah, they are dumping it. If it closes down underneath this trend, or if it pulls back down under here, so that sort of levels like, where are we? 125s, yeah, 125s, 126s. If it starts to creep into those levels before close, then I don't know how low they're going to push this thing, but you definitely there's already double digits in play, so you could start to talk about some pretty low double digits if they start to, push it down and close under some of these levels. Okay, so from a support perspective, yeah, you never really know until, what are we at now? 130.8. Yeah, so they've just nuked it $5-6 in a matter of minutes. Wonder what they're gonna do. Yeah. So if 120 fails, then based on some of the higher time frames, I'd probably look to things like 108, 109. If they fail, then 100. If they fail, then look into the 80s and the 50s. In fact, if we close at these sort of levels, I think you're probably going to see 50s coming into play. This looks like a pretty epic rejection that they're pushing it down now. Question is, do they bring it back up in 1 hour and 52 minutes before close? All right, let's have a look at some of this bigger stuff. Okay, here's your 2 week. So the next 2 week level, which has already been tested once, so may not hold, is this 120.646. And really it's a case of, do they close back up above this level here, which is 130.587. And as you can see, they're doing everything humanly possible to dump the price down below that at the moment. So do they close back up above that? In which case, maybe it bounces off that and travels up. Or do they just keep applying the sell pressure like they are now and try to get this thing down? So that is where we're at. But yeah, your guess is as good as mine. That candle cannot make up its mind. Okay. So we've got a 31-day close today. It looks like that's going to be, under trends. And this is sort of what I mean by, like, they really have to get into the 150s just to fix any of this stuff. This is really very bearish. Very, very bearish. Don't know how many times I get to say that. The only way for this to be a bullish close in a liquidity sweep is for that candle in the next 1 hour and 51 minutes to pull all the way back up to its open, which I don't really see that happening. And then that is a liquidity sweep of the trends. Failing that, it's not going to move the trends today because it's on them. They didn't hit the 120.487 level, which is, like I say, that very key level. It's always been quite a key level. And basically, if you're talking about bullish price action is when they dive through a trend, tag a horizontal level, and then pull back up before the candle closes. That's bullish. When you're talking really bearish price action, it's when they go down, they stay down, they hold it down, and then they go and tap the support when the new candle opens, or they dive the support, and then they just keep repeating. And there is a trend that a prior broken trend that comes through here, and there is, that's not it, sorry, it's there. Okay, so you can kind of see how bearish this could be, because if they push it down even just a little bit more before close, what they can then do is come and hit the support level and then not even go back past 130, because 130 would potentially become resistance if they close this down where it is now, or even just a fraction lower. So, and that could be the entire plan. They may want to break this 120 level, in which case they can continue down to the trend at 105, and then be stuck in this new wedge. Or maybe they want to push down through that trend and try to hit these break levels. But yeah, as you can see, the actual range that this candle is trying to do is trying to push it down to this down to this 89 level. And unless it closes back over 152, that is where it's going to try and go. And it's going to have to break a whole bunch of stuff to get there, or it's going to have to dive through a whole bunch of stuff to get there. But it can do anything it wants in the next 31 days, as far as just go all the way down to 89 and then it can stay there for 30 days and come back up on the last one if it wants to. But yeah, we are looking at some pretty bearish structure here. Okay, next. And this is why right now price action is just so bipolar. Okay, no offense. The next level that you'd look at, let's just put that one in there, because that was kind of a fake out of that level. The next levels you'd sort of look at here are some of these bigger levels, which are currently actually holding. So, as long as we stay above the 130.587, we are going to shift the trends today. We could bounce. The bounce might be capped out here at the range level at 139.5. So, okay, maybe we do achieve the daily, and then maybe we push down here to 117, and then that could continue and keep going down. Who knows? But losing this trend today is actually epically bearish. The only good news about losing it is it's moving to the bottom, and the wick is a pretty decent size on the bottom. But it's another reason not to close under that 130.587. If it closes under the 130.587, moves the trend, then it's got a level to try and break the trend. If it stays above it and moves the trend, then it might tap the trend and then actually push up. But it's yeah, everything seems to be just so indecisive at the moment. There's definitely major players trying to push this thing and break through the the $100 mark and knock it down. And at the same time, there's someone buying here. There's something keeping this price up. Okay. Looking at the 4-week. So break level for the 4 weeks, probably about the same. It's going to be, 130.587. So far the theme is really need to stay above 130.587. I wouldn't even call it bullish to stay above that price. It's still bearish, but it's just considerably better than the alternative. Okay. What you really want to be is above 137 before the end of the day. But we were nearly there, and then they just sold the thing down again. So I don't know about whether we get above that, but we'll see. This is so this 6-week time frame has 126.826 is the origin level for that. And in any normal world, you hit a high time frame origin level like this, and the price should really go up, like very much bounce. It isn't. So you can see sort of what happened over here. We went down, and then we did pump up, and then we came down. So last time we hit a 6-week origin level, we went from 137 to 179. And now we've tapped this one down here at 126. Even just conservatively heading back to the first trend should get it back to the 150s. But what they might be trying to do is they might be trying to lock it in between these two origin levels. And if they can do that, they might just push it back to 137, hit 137, and then dump all the way down here into the double digits. So, yeah. The other way just to do an instant dump is pretty much to go under these levels. They can still come back up, like what you've seen them do here previously, but you can see there's some pretty big wicks on these. So when it went down under the level here, it went from 137 to 95 before returning back up. So if they do close down under either of these levels, and the 137 or the 126, it's totally foreseeable for it to be able to come all the way down here into maybe even this prior trend down here at 90. There's just so many structural targets aiming at 89. It's just very possible for us to see the price down here in the shorter term. Okay, and then you get things like the 8-week, which is bouncing off a trend and really just not moving. It's going to create a break level. at 130.587. So you can sort of see how critical that level is. A close under that is basically like breaking 8-week ranges. It's closing under huge origin levels. It's just a dump waiting to happen, basically. And I think it would be the kind of dump that no one's going to expect down to some very low levels. And as far as range candle, this thing is huge. So yeah. So this closing below 142.8 today, this candle is capable of creating a range where the first part of the range is 74. So, you know, it is really pump today or lots of new lows. You know, lots of new lows get introduced, and then it's just a case of how high will we go. And you know, there's things like the 34-day break that happened. I'll show you that at the end, so you get an idea of, you know, creation versus future and time. Okay, so anything below 131.561 today, new level $58. Okay, below 130.587, based on the size of that monster, new level $57. Okay, so don't want to be down here. Really don't want to be down here, do you? Okay. Below 147 today, new level 109. Trend moves today. Candle opens on the wrong side of trend. 135, 136 could be the rejection. That candle needs to close yellow. If it doesn't close yellow, the chances of it then just rejecting off the backside of that trend is huge. And unfortunately, there is no support for something that big. It's just down. Yeah. Okay. And I'm just going to quickly show you something. So when a bearish level gets created, you can often go, you know, quite high up into it before you actually achieve your target. So, for example, we created this. Now, on the 34-day, when we created this time frame, we can't build a range out of this because the level 2 is in negative. So first of all, that was just not even going to happen. However, that, right, which is the normal hold, means that when the price enters back up inside this candle, it's going to come back to 123. And to do so, it is potentially going to end up having a fight with a trend, which is what happened because it built this trend. Okay, so we had that blue candle, we created this trend. And for as long as we could stay above this trend, and as long as this trend supported the price, it was never going to be able to make it back to its target, which is that 123 target. But also, if we look inside this candle, so we'll just chuck a line here. So just pretend none of this existed. Nothing right of that line existed. And we put a line here. And then we start going down timeframes. And I won't completely bore you with all the different timeframes, but basically, I think we had a 16-day or something inside there. We did. There it is. Okay, and then I think we had maybe a 5-day or a 3-day. The 5-day was really tricky because it 241.916, and that little wick didn't quite touch that, so it was like the height of that candle is 241.802, so that was our 5-day. And so all of these are just laddering forward as like refined levels, and then I think we had our 1-day inside there, and there's the 1-day, and that's, you know, 253.275, and we got to 253.429. Okay, so those were our refined entries inside that higher time frame move. And so then if we zoom out and we have a look at it, you see what it looks like? price creates structure on the high time frame, and there's all this lower time frame stuff going on within it, and then it moves up into the structure here, closes inside the hold, so the hold becomes support, goes all the way up to the refined entry, and then reverses eventually to the target. So, we took, from the moment we entered, 1, 2, 3, 4, 5 candles to actually get back to the target. And the only way it was ever going to get back to the target was that it was going to have to break, some trends or dive some trends. And there would be older trends, in play from back here as well. So that one went to there, then it went to there. Okay, so take that one out there as well. So, for as long as it stayed above this trend, it was always going to find it pretty hard to get back here. But eventually it did. And, in 24 days from now, this candle's either going to close under the 123, in which case it could reject off the 123 and try to target $17, because that would be a creatable range, or it's going to close back up and end up pushing back up to this trend, do a retest, and that gets you up to that sort of 179 sort of area, and that is an area we have targets to go and visit. So all of this stuff is really just high time frame, greediest entry, down to target, and now we need to know what this candle is going to do, because at this stage we're either going to break and move the trend and maybe bounce back up, or we're going to close under these key levels and end up more to the downside. So right, let's have a look at BTC. Well, BTC on the 1 day, the very definition of a fake pump and then pullback. So we just pushed up through the trends, pushed up through the hold level, which has been flipped into resistance, and then just pulled back again. So if it can close up just a little more, so even at 89.4 or something like that, it's going to be on the top side of that trend and at least have the ability to try and break it. It might create a low probability hold if it closes above 89.28. It would be more bullish if it closed above 90.241, and it would be a lot more bullish if it got back above that support trend. But to do so, it pretty much has to go back to where it just fell back from, and do that in the next 1 hour and 35 minutes. And from a low time frame perspective, if it does that, it's actually, just shift this over here for a sec. It's actually kind of neat if it does that. Like, it's just ranging, right? Oh, gone. Right. So, maybe we go up, we go down, and then maybe we do range up. This could happen in the next hour and a bit. We'll see. Or we close down. Uh, so if we do close down on the daily, then we get a second blue candle inside the hold. That's not very bullish, but at least it shifts the trend. The trend might then have a chance of breaking out. So it is really decision time, for BTC as it is for Sol. They need to start breaking out of these levels, or it's very, very bearish. Very, very bearish. Okay, let's have a look at, or just before we flick off this though, the one thing that is relatively bullish about the strength of BTC right now is it hasn't actually hit these levels down the bottom here, and it still is holding that trend. So, you do have these levels down at 86.2, yeah, 86,266 that it hasn't hit, which is the origin of this whole range. So hasn't gone to the target yet either. They may pump this before the end of the day. They may pump this. Right. Now, the 11 day, it's failing on distribution, but it's stuck under a prior trend, but it is also holding support. It's just a complete doji. Now, the main thing you want to see is you want to see this above 91,142 before the end of the day, or you want to see it as a yellow candle, but you just don't really want to see it under that level as a blue candle, because then that horizontal level may come into effect, and it's a very dirty origin level, that one, which got created by this failed distribution candle here on 14th of February. And if this closes blue, it is hard closing that level, in which case, oh look, 78 would be, it would target the break, which basically means 78 would be the target. So it's just a case of pump, or it's going to really go down. Okay. Weekly. So the weekly rejected off the prior broken trend. There, it may open on trend. It's just really undecided. I don't know whether that, yeah, to be a good level, it just has to kind of get clear of that trend, which doesn't mean much. It's still really the low 90s to get clear of that, but it is still under the prior broken trend. It also, my main concern about whether this just goes on a big flash dump would be that when it hits this range trend that's running from the highs, see, it was created by this candle. It was touched, it was touched, it was touched. They failed to distribute back to it. They failed to accumulate back to it. They failed to accumulate back to it. They failed to accumulate back to it again. Now, typically after failed accumulation or distribution, the next time you touch a level, the level is much more violent. So they may be closing down here. They could simply open, push up, hit that range trend, push through it maybe in the next week, achieve some kind of target, get people bullish. But after 1, 2, 3 weeks of failed accumulation back to the resistance, psychologically, if you think about it, there's just so many people who are going to give up if the price goes up. They're just like going, oh, look, if it gets up above here, anywhere above here, I'm going to sell. So the level of selling that might come in when you hit those resistance levels after so many weeks of failed accumulation could be quite high. Right, let's look at the bigger stuff. So the 2-week is still above trend. It's not too bad, but it has failed to get back so far into that 93 to 101 range. It hasn't hard closed the 100k level, or the 99.514 level yet. So, if I just looked at that chart in isolation, I wouldn't be giving up on it. I'd be looking for this potentially to come back to 101. And then things like the 31-day, they haven't actually touched their trend. They're below the 97 level. They're below the 92 levels. So, yeah, you could see a bit of a push up in the next candle. But I would be saying that if it did give a push up, levels like 80 flat, which never quite got touched, 80, 107 that is, the break level down here would probably be in jeopardy as well. So this is 74. Yeah, a pushback up into these range levels as high as basically 108 could still trigger a pushback to these lower levels like 80, 76. Unless you can get an accumulation close in the next 31 days, the next two range levels are 62 and 44. So looks like a pretty good bear market range. That 62 level 2 is just a retest of a prior broken range trend. It's perfectly confluent for that to happen, along with the range 10 yeah, that would happen in if they did it anywhere in the next 60 days, it would just be very efficient to retest both those levels, or all three of those levels in the next 60 days would be very efficient. So it's a little bit bearish looking at that kind of thing. Okay. And then the 3-week, we are this 91 512, which is pretty much where we were rejected when we tried to push back up. This is a very dirty, filthy origin level. So you had the range that was in here. It dived below it, but never hard closed it, got back above it, failed to distribute back to it on this candle here on the 12th of May, making that actually an origin level. Now, we are below it currently. If we get back above it, then that could give a push up into these resistances. But as you can see, there's a stack of resistance all in that one area, which is kind of why it's such a quick dump. We did tag the range level, and so therefore it could be trying to push back to that 97. So we might have this down here operating as support. The origin level is, if it gets above it, will help with support. And then as far as resistance goes, the prior range trend coming through here and the down facing range trend coming through here are both going to act as resistance. So it's really just sandwiched in between all that. But closing above 91,512 would definitely help as far as continuation to the upside. But getting any kind of guaranteed continuation to the upside once we run into 90, particularly if we close below 91,512, that's bad. But if we get above that and we still close below these 93 levels, then there's probably still going to be resistance and potential rejection even around there. It's a very horrible place for a candle to be closing, that one. And looking at the 4-week range, needs to be above 91,357 if it wants to try and move up. Below 91,357 could trigger 78 and could trigger 66. And that would just be a retest of break levels and origin levels since they've been broken. Such normal price behavior, but it's just a case of, does it do it now or does it do it after it pushes back up for a little bit? Okay, 96 could flip the hold level into resistance, but nothing is hard closed yet, so could also get out. So hard to tell on the high time frame what this is up to. Normally they don't spend time like this, such huge amounts of time just hanging around in the lows. Normally they go down and they bounce, but there'll be things like, you know, new trends, etc., forming in here today, but it just didn't really tap support properly. So the more I look at all this, all I see is just they've come down, they've spent all this time down in the lows, but they never really tested the things they should have tested, which just makes me think that it's not over and that you're gonna see a further dump and then maybe test these levels properly before a bounce. And then the other part of me sits here thinking, well, what if they're doing this just so that people are all waiting for these levels, but these levels will not be hit because there's too many people wanting them or waiting for them. I don't know, but one way or another, you know, that close on the 6-week on BTC there basically has a 79, a 74 to 73-ish sort of area that would both be areas you could expect the next candle to come down to. And then it has areas like 96, 99, and 103 to the upside. So, you know, somewhere in the next 6 weeks, you're probably going to find both sides of that get tapped. The origin for this range is down here in the, where are we, 60,145. So, and if we look at this candle, which is kind of controlling this whole range, The 83 level could be what's pushing it back up. So that's basically the range level for the entire range. The 3 being the 125, the 2 being the 104, and we've already kind of done that move previously. Like we went to the 104, we went back to the 83, and then we went back to the 104. So you can kind of see that candle just closed there into resistance, closed into resistance, broke through to the next level, hard closed, hit the resistance, came back down. What is really odd about these charts, and has been odd now for quite a while, is that we never did the proper bounce between there and there. So, we went hard close, up, down, more down, whereas really should have gone like up and then down. So that's why I can't really put aside the potential of going back to all-time high, as weird as that might sound. Looking at all these bearish charts, just cannot actually rule it out, because we're definitely polarizing this level. So the all-time high has become polarized through the lack of accumulation back to the level. If we get to all-time high again, it's get the hell out. It's going to reject. But it's a big if, as to whether it gets back there. We haven't polarized this 104 level since hard closing it, and the only way we're going to do, since being under it, the only way we can do that is to have a 6-week candle that doesn't go back there, and then if it goes back there, hits it, bigger dump. But it's just seems a bit off. Okay, and then 8-week. 8-week needs to be above 92.728 for the end of the day, and if it doesn't, then it needs to be above the trend, which it is kind of just right on the trend right now, but yeah, it's pretty much the same level. It really needs to be above there, and that means we have to, on the lower time frame, we have to basically range up above where we just rejected from, all in the next hour and 20 minutes, and then closed, at that 92.728, which who knows? Maybe. Always lots of drama just before close. Okay, and then looking at the 12-week, the 12-week supports the price moving back up. We haven't hit the break level, so that would be going down to 74.466. We have failed to close the candle under the 1618, so it's not trying to create a 12-week range to the downside. It supports price going back to 99 based on structure, but it never really tested the range trend either. So you sort of got to wonder whether it's just going to open up, fake everyone out, dump back to the lows, and then go up, or are they leaving that there because when they go back up, they're going to reject to come down? The minimum obligation for, although that is technically a high risk hold level, the minimum obligation for that 100.9k hold level would be a move eventually back to 86, unless a trend got in the way. But as you can see, there's no trend in the way of going to 86, so it would, maybe they do go all the way up to 100 and then back to 86. All right, 16-week. So this is another one illustrating the importance of 92. So 92.728 is the make or break for this thing. If this closes below it, it's another time frame that is heavily in conflict, right? So if you only were a bull, you'd put a fib on this candle, because that's one trying to create a range on the downside. So you'd put a fib on this, and you'd go, I'm bullish because we are holding this 86. And because we're holding this 86, we're going to go to 109, right? That's absolutely a bullish view, you could also put a fib on this candle, and you could go, this is a liquidity sweep of this, and we're going to go to 131. Okay, that's how you could be bullish. Okay, but at the same time, if you wanted to be bearish, we all love our beers, then you'd look at this and go, well, if we close under 92.728, we're going to go to 73. And that's what's going to happen. And maybe this trend is going to try and stop us, but we're at least going to go to 81. So that's kind of what a bear would be saying. And sitting over here, they can kind of justify themselves because when this candle got engulfed all the way back here, it was a case of, well, we're going to go back to 90, and we eventually did. We went all the way up to 124 before coming back to 90, but you can sort of see how this stuff does play out eventually. And so last cycle, you had this candle here, which didn't engulf the body, and that sort of represented the failure at the top of the range. And then it started to range down, and then you got this, and then you basically said, okay, well, I can short here, and I can, look to rebuy at 21K or lower. And it was all just pretty easy. There wasn't kind of anything pointing in the other direction. Like, you could come all the way back here and, oh yeah, what about that range? Well, that range well and truly had already played out because it had completely exploded to the upside. And, you could find something bigger, etc., etc. But this time is very structurally different. Like, you look at this bull market versus that prior bull market, this is really different. Retracement is what generates controls for ranges, and it's what generates support. And while in the previous bull market, it was just up, 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 that also meant there was no support, no real ranges. When price failed to reach these higher levels, and it's pretty obvious on this candle, like we got all the way up to the top here, this one failed to even get back to the top there. So fractally, just looking, without even looking at lower time frames, you've already got ranges have failed to reach the highs. And then when you sweep those highs above this area, you're gone. So without any of that stuff to support. Whereas we look over here, and this was the first sign that maybe you should be going down, was this and this. And when that new candle opened, it went down. But because it had built this trend, it bounced off the trend and it kept going up. Now, that have all been higher. So there isn't really too much in there to show that it is failing at this stage. So it's just as easy to be bullish and sort of suggest that this thing's going up as it is to be bearish. And yeah, good luck on that one. All right. And when you start looking at this really high time frame stuff, it's all still the same. Now, if I get rid of this for a second, this didn't go as low as this. This went higher than these, but there's no failed accumulation in there. Like, it's been higher high, higher high, higher high, higher high. So really it's not like what you saw over here, where it was higher, lower, and then obviously down. That's kind of what happened over there. So now we get this trend, new trend forming, really big, really old, and we're going to open above that trend even if we open at this price. So the price seems really short-term bearish, but at the same time, you then look at something like this and you go, well, if we bounce on that trend, we have got a hold at 98.339, but we haven't engulfed the wick. To actually break, or for that trend to challenge anything, it really needs to challenge this hold. And maybe this hold is the one that stops the price from reaching a new high, and in which case, hey, yep, we break the trend and then we move into the bear. But it's almost too early to say that, because it hasn't engulfed the wick. It can't create a range. It has got a trend. If that hole breaks, then this can keep going up. So yeah, talk about a very confusing cycle. Definitely a very confusing cycle. But hey, we'll take it. It is what it is. All right. Hope you enjoyed all that, and like and subscribe. And I saw my first little sneak peek of a system that basically puts all of this into a web portal for people, and it looks pretty cool. So yeah, as far as all the numbers and the levels and that kind of thing. So it's being developed in the background, and hopefully that'll be out sooner rather than later. We'll see. Okay, catch you again on the next one. Bye.